All right, ladies and gents, welcome back, welcome back. You know what time of day it is, 7:30 a.m. Crude oil morning prep. We're going from the screen to the floor this morning. My name is Joseph James. I've been looking at charts for over 12 years now. I run a trade room at schooloftrade.com, and today I'm going to provide a technical approach looking at crude oil futures. I'm joined today by Marty Errico. Marty Errico is from tradersaudio.com. He's got his feet on the ground in the NYMEX exchange, and he's going to provide us with a very unique look at pit analysis this morning. So I'm here in Los Angeles on my trading screens from a comfortable, cushy home office here in Los Angeles. And of course, Marty's braving the elements down in the NYMEX pit. He's going to be telling us what he's seeing directly from the floor. There's a lot of things we can't see here on our screens that Marty's going to be able to give us from the floor. So we're excited to have him here with us this morning. But before we go any further, let's jump right into the charts this morning. 7:30 a.m. Eastern Time. Every morning we do this top to bottom approach. First of all, let's take a look at the slowest time frame. Let's look at these daily charts. Now, daily charts, as I always kind of remind all of our students in our trade room each morning, the daily charts are used to tell the story. So the daily chart is the drama that's led up to everything, right? The daily chart is not going to give us trading instructions for today, at least not for all of our intraday traders out there. Swing traders, possibly. Daily chart this morning shows us a really big clue. Now, if you recall last week, we had made it about 3/4 of the way up, and we had failed to complete the move all the way to the highs of this wedge. Now we come in this morning, and we remember Friday's non-farm payroll, big gap down, big gap up. We gapped up on Friday, and of course, over Sunday night into Monday morning now, we have tested the 97.02 sell zone. We have tested the top of the price wedge. And guys, you don't need to be a rocket scientist to look at this big candlestick wick. This big candlestick wick is a huge clue of things to come this morning. So the first things first, the daily candlestick sets the story, right? It gives us some of the background of what happened last week. Last week we jumped up, tested 97. You can see the look of this big candlestick wick tells us that those buyers may have bitten off more than they can chew. And so this morning we will expect, based on this candlestick we're seeing, we will expect prices to gravitate lower. Now there is going to be pullbacks on the way to continuing moving higher. So let's now move to a little bit faster time frame, and let's see if we can't pick up on how far this pullback may come. Let's move now down to a much faster time frame. Here's a 4-hour chart. A 4-hour chart, I think, to be one of my secret weapons when it comes to top-down analysis. And this 4-hour chart shows us a very similar situation that we saw on the daily chart. But now, this time around, we get a lot more clues. Boy, what a great illustration here of how we really exploded filling in those wide open spaces that we were talking about all last week. If you recall last week, we were talking about how a little pullback back, and then bam, right, we could definitely see a big wide open space fill in that open space above us. That's exactly what happened on Friday, and then of course going into Sunday night. Remember guys, we open at 6 p.m. on Sunday night trading electronically. A lot of new traders don't know that stuff, right? The pit is only one part of the equation. We still have the open, right? The electronic trading session at 6 p.m. last night, Sunday night. So this morning, what have we seen this morning? Full-bodied red candle as we move lower. And remember how we talked about the pullback? Well, there's your trigger zone. Now this trigger zone, 95.38, this for me, this is the line in the sand between this being a pullback or it being a full-blown reversal down to that 94.27. This is a huge clue. The 4-hour chart tells us we are bearish down to 95.38, possibly all the way down to 94.27. Daily chart says look for the reversal. 4-hour chart says we are bearish down to 95.38, possibly down to 94.27, unless this trigger zone support can hold. Let's keep going. Let's go faster now. That's my 4-hour. Now let's move to a 60-minute. Here's a 1-hour chart, and the 1-hour chart is what got me trading short this morning. The 1-hour chart shows me that, again, here's that pullback trigger zone that we just found in the 4-hour. Right? There's that 38, there's that 34 area. We just found that in the 4-hour. Now what do we see? Now in the 60-minute chart, the 60-minute chart shows us another swing low, swing high combination in another trigger zone. But this trigger zone shows us A key close right there. That candlestick closes right below that trigger zone support. You know that means we're expecting lower prices. So once we close below that trigger zone support, now we assume we're headed down to the next buy zone. This is a 60-minute chart, remember, guys. So it's going to have all the 4-hour information, which is down bottom here, right? There's your 4-hour trigger zone. So that's where we expect prices to head to next. So I am short this morning here as we speak, down to 95.60 for a partial profit target. I'm going to be hunting for this 95 even, though. 95 even. That's going to be my big round number. That's going to be a psychological level. It's also the line in the sand, that 95 even. If we can get and close below 95 even, guys, we have another wide open space down there to 93.60. So 95 even is definitely going to be our line in the sand between buyers and sellers. If we move back now to our 4-hour candlesticks, move back to that 4-hour, now you can see if we pull back to 95, so I'm going to be selling short down to 95 as my runner target. If we then move higher, I will be bullish. If we close lower, I will be bearish. 95 even. Let's take a look at it now on our VIP chart. The VIP chart is a very important chart. Where's that 95 even? 95 even is all the way down to the London trigger zone, right? The London golden ratio. So we look at the 5-minute chart here now. 5-minute chart shows me one important clue is London's trading session. London's trading session is not wide enough for us to expect a price reversal this morning. So another big clue coming here out of London. We saw a bearish tone to the daily, a bearish tone to the 4-hour, a bearish tone to the 60. Now we look at this London session. London session moves from 3 a.m. until 7 a.m. Eastern Standard Time. And we see here the range of trading between London's highs and London's lows. This tells us that we still have more room to go. Now you'll notice we have tested the overnight -1. We have the London -618 below us and the London -1 below us. I will expect prices to move relatively quickly to 95.50. 95.50 is where I am taking a partial profit target. My final target, as I said earlier, is at 95 even. Now, of course, I will be trailing my stop. I will use my 50% stop trailer on the way down, so I will look to exit my trade if we don't get price moving lower. As we look at this London session, this London analysis, we have a lot of wisdom that comes out of London. What's the first thing that stands out? Reversal zones. You can see the reversal zone below us, the reversal zone above us. The fact that we are outside of that zone right now tells me we should continue to go lower. However, as I've said before, I will expect when the London session is broken, I will expect a possible fake out breakout. So I will place my stop loss for any short trades right above that 95.91. And of course, don't be afraid to take that buy now going back into London's trading session at the lows. So we've seen a top-down analysis approach. Markets looking bearish this morning. Daily, 4-hour, 60-minute. Here on the 5-minute, this is my VIP chart, the very important price levels. And as you can see here, we may see a little bit of a bounce here off these London lows, right? But we can tell here now, looking at this bearish channel, we can tell here looking at the fact that we are below the London close or below London lows. We should keep moving lower here as far as I can see. Where we move to, we've talked about that 95 even. 95 even is going to be a great target for you sellers this morning. I will take a partial profit target off, though, at 95.50 on the way down. If I'm completely wrong and I see price break back above and close back above 95.91, I will exit my short trade and look to buy these lows. You can see here there is a channel resistance that's going to be coming in overhead. I will use that to take a partial profit target. Final profit target, though, will be up at the reversal zone back overhead. If we try to break out, again, keep an eye on the fake out breakouts. If we try to move higher here, be aware of that reversal zone overhead. And as always, a close above, in this case, 96.60, I will be buying long here. As always, my name is Joseph. Thank you so much for coming and joining me here this morning. I'm here in Los Angeles in front of my computer screen. I want to welcome back, though, Marty Errico from Traders Audio. Marty has his feet on the ground, the NYMEX exchange, and he's going to tell us a little bit more about what he's seeing directly from the floor. a very unique approach here now, moving from the screen down to the floor. And Marty's going to be talking about certain dynamics as direction, divergence, internals, options, and of course we'll finish up with today's most important pit session trading levels. Marty, without any further delay, take it from here, my man.
All right, thank you, JJ. Good morning to you, ladies and gentlemen. All right, we're taking first a look at just the fact that we have absolutely no data scheduled for release today. Just want everybody to know that. No economic data scheduled for release, but a lot of breaking geopolitical news that's really disrupting crude oil at the moment. Again, we saw a big run-up from 6 p.m. last night when we opened up to right now. We saw a big run-up from the afternoon, into the late night, I should say, not afternoon, late night session. Again, we're talking about 97 bucks. We tested 97.20. We tested due to some geopolitical news. Again, there was some problems going on over in Syria. There was Israel coming in and bombing, Israel Air Force bombing the Syrians' weapons factory. We saw very similar activity to that point as well here, just in terms of geopolitical news, which gives you that geopolitical risk premium. Markets trade higher. Pretty simple. So now we're watching a fade off of that 97.20 level. 97.20 was a level that me and JJ had picked out last week that we can use as a potential high. Now, it really doesn't mean much to me that it was made in the overnight session. I need to see these levels printed during pit session hours, so I really don't care that it was printed last night. Right now, ladies and gentlemen, what we got is just direction right now. Let's talk about direction. Real quick, we're looking at crude again, as I mentioned, fading off the high, still in positive territory. I need an open here above the 95 half level, really. I need an open above 95 even for me to stay bullish. We're looking at Brent crude. It was above 105 last night, working its way back up now. We're 104.64. The Brent WTI spread is pretty tight at the moment too. We're talking 881. I'm also looking at your calendar spreads. They're sort of in somewhat of a mid-range trade at the moment. Again, overnight session, a little mid-range trade, so I can understand why we see that. We're going to have to really pay attention to these spreads on the opening bell. And we're going to be looking for that opening print above 95 even or above 95 half, I really should say. Crude here, looking at the crude June to July spread, 23 cents June to August, 24 cents. I'm looking at an inverse of 1 cent on the June to SEP. Again, these are just our calendar spreads, very simple. All right, let's take a look at the dollar index. The dollar index was giving us some clues last night into the opening session, but you can see during London's trading session, during the overnight session, absolutely no activity here in this dollar. Very, very thin trading range again, and not really giving us much indication here. So the dollar euro, I'll call it a risk-on sentiment. We see in the time that we've been open, we see the dollar start to trade a little bit higher and crude just fading off its highs, so we can call that a half risk-on, risk-off sentiment. Bonds as well, just 147 even down to 30 seconds, which isn't really much either. So again, this is going to be a very lackluster morning. It's going to be not a lot of follow-through. I think what can move the crude is any type of breaking news or purely technicals today. So, okay, so we talked about dollar, risk-on sentiment, bonds giving us risk-on sentiment. The currencies are contributing to about 50% of the move, and the other 50% will be supply and demand this morning. Again, no news at all this morning. Let's just talk about volatility. Vol is very firm at the moment. Yesterday and on Friday we saw very low volatility, and these higher strike levels is when vol starts to turn around here just a bit. So keep in mind that higher volatility could spike down prices, but I wouldn't hold my breath, and I'd still want to keep this volatility still in bid session here to give us that nice trading session today. We're also taking a look here. Open interest currently stands 278,327. Again, that's 278,327, and that's actually a little bit lower here compared to my notes, so that's bullish. Again, volatility around 25 to 27% in the range from the overnight. Big trades in the pit. The 95 call was bid very largely yesterday. Again, we're talking 95 call was Friday's session. Trades over 5,000 times to the upside. Dealers are mainly involved, and locals as well. And then we see the 94 to 93 put spread trade lower as well, about 1,000 times. So honestly, that's why I say we have to stay above 95. If we get below 95, that would be quite bearish, and we could see obviously those put spreads come into play. But right now I'm looking at a bullish-like sentiment, guys. I really think we can make our way up to the 97, and that's when we're going to turn around within our range today. So I'm thinking overall for the week, for the day, we could see a little bit of a light trading range, a little bit of a higher sentiment. Again, this geopolitical news with Syria is really going to keep this market, I think, above 95 bucks. And again, if it falls under $95, we get a pit session below $95. That's it. Then we're going to be selling the high of all these ranges. We're going to be selling the highs of all these advanced price structures that JJ got up, and I agree with that. But right now, if we can stay above 95.5 for the opening bell this morning, I'm thinking bullish. Levels, ladies and gentlemen, here. So again, we just went over open interest. We went over strike levels that were largely traded in the pit. Let's go over our pit session levels. 96.04, your high on Friday. Again, that's 96.04 your high, 94.82 your low. We have a pit session close at 795.62. So it's important to get above that 95.62. That's our pit session close. The pit session daily pivot, ladies and gentlemen, 95.49. We're taking a look here at resistance above 96.16, 96.71, and 97.93. Overall, 98 even as well as some resistance above, but that's just for today's pit session, yesterday's pit session. These are just some levels that we're getting out of those. So once again, 96.16, 96.71, and 97.93. All very reasonable resistance, which I think that we can trade into today, and they could cause a reversal. Support down below, we have 94.94. 94.27 and 93.05. That's for your crude oil. Again, we're just looking at some resistance below. Right now, we're looking at RBOB heating oil, our multiple market divergences so far this morning here, all just kind of fading off those high prints that they printed last night. Again, we're looking at a little bit of a fade off the highs that they printed last night. So as these three markets all just kind of fade off their highs, they're all moving within in tandem of each other. Oh boy, let's just take a quick look at the board real quick here. At the NYMEX, again, I got just, honestly, it looks like crude might be the leader here today. So crude leads, RBOB and heating oil lag. So again, crude leads the party here. RBOB and heating oil lag. Natural gas, we're just looking for this product here just to kind of trade above this 407 level. Again, 407 to 410. If we trade above that, we'll trade higher. If we open up where we're at right now, or we open up below the before the $4 level by 399, 397. We're looking to be looking for 393 and then 386. So again, open below $4 in the 390 handle, we'll be looking for 393, 386. And if we open up above 407, we're looking above 407, above 410. That can bring us back up to a 50% retrace of Thursday's big sell-off. Again, so 421 will be that retrace target if we can get above the 410. That's going to be simply put it in natural gas. Again, just keep in mind in natural gas, we had a couple things come out in natural gas over the last couple days besides the big inventory number that caused us this big downtick. We got natural gas rig counts. They split up to these 18-year lows. 18-year lows in the natural gas rig counts, 354. Those are the Baker Hughes rig counts for natural gas. Brazil natural gas outputs, they rise to 176 in April. And then just besides the rig repairs that are happening over in Missouri for natural gas, we have those rig repairs finally coming into play, and we will now see a little bit more. Also, I want to talk about the commitment trader report. We had NYMEX crude oil speculators raising their net long positions in crude by 13,000 contracts to 243,927. So again, the change in the report that came out for the COT guys was net long. So that's just for speculators again. So those people like me and you in the pit that are just raising their net long positions in the crude. So again, we're going to have to keep an eye on this, see how it all develops. Natural gas levels, I got 405 half high, low 397.70, close and sell at 404 even. Once again, here your daily pivot 402.40. We had a net range of about 8 cents, which was nothing on Friday. Volatility 31%. Open interest 216,119. Resistance above 407.1, 410.20, and 418 even. Support down below, 399, 394, and 387, sorry, 387, that last level support. So again, ladies and gentlemen, that's about it here, guys, on the trading floor. And I guess we're going to wrap this one on up, guys. Again, hope everybody has a wonderful day. Good trading to you all, and we're throwing on over to JJ.
Marty, what do you think will there be a negative correlation to the amount of Cinco de Mayo festivities to today's volume on the floor, you think?
Yes, I definitely think so, for sure.
Are we going to see any margarita glasses hanging around the trading floor today?
I think there's going to be a big inverted correlation on that there, JJ.
I'll bet you're right.
Risk
Guys,
off.
Don't forget, today's a Monday morning without any major news. As Marty and I have so kindly joked around about, we are coming out of a festive Sunday afternoon. So don't forget, human beings are responsible behind these candlesticks. And so every day we remind ourselves that even though we're looking at charts or looking at a trading floor, it's all human beings behind those candles. Marty, thank you so much for your great commentary this morning. Have a great day down in the pit. I want to thank Marty and the entire Traders Audio team for always being great hosts for us here. My name is Joseph James. I'm from School of Trade. That was Marty from Traders Audio. And as always, 7:30 a.m., we take a half an hour and we go from the screen to the floor. I'm in Los Angeles. Marty's in New York. Hope you have a great day out there. And remember, come out and join us every morning, 7:30 a.m. We'll be putting up all of our notes on the blog now. Don't forget to check out crudesquawk.com, and we'll see you guys next time. From the entire team here, we'll see you tomorrow morning, 7:30 a.m. Learn it so you can earn it. Adios, amigos. Bye-bye for now.